Hi, my name is Alan Porter with Strategic Wealth Strategies, and what I want to show you today is how to become your own banker. I call it the private reserve system. What I teach my clients is how to become your own banker, how to manage your own money. Like I've said before in some of these videos, that I've got 5 of these index universal life policies on myself and my family. In a couple of years, my cash value will be built up to the point to where if I want to buy another house, a car, a place down at the beach, I'm not going to have to go to the bank. All I have to do is go to my private reserve, which is my permanent life insurance cash values, and borrow the money from them. Now, what I want to show you this is transition to this computer screen again. And let's say that we're getting 10% return on our money. We're in the 30% tax bracket. And let's say, just as an example, I know this is a lot of money, but let's say that we had $1 million in our amount that we're investing. So let's go down here and let's look at 1 year time frame. We've got $1 million. We're getting a 10% return on our money. So we've earned $100,000. Our taxable earnings are $100,000. Now we're in a 30% tax bracket, so that's $30,000. Our net investment earnings, the 100 minus the 30 equals $70,000. Your net total earnings is $70,000. Tax equivalent return on investment is 10%, but your net internal rate of return is 7% because we had to pay $30,000 in taxes. Now what I want to show you is when you become your own bank, we're going to do this with the private reserve. One of the companies I work with about 15 of them, but they have a loan rate that is guaranteed by contract at 5%. And let's just put in 6.5 as far as our crediting strategy. And I can show you in a 15-year period through backcasting with one of my policies that I can get 7.25% and 99% of the time of growth in a 15-year period. But let's go with 6.5%. So basically what that's going to do for us, now basically we're looking at here, we went down here, we got that 7% growth, I explained all this. But now with our private reserve, we've got $1 million again that we're investing, we're getting a 10% return on our money, we made $100,000. But we borrowed that $1 million from our life insurance policy right here. We have to pay 5% on it, so that's interest, and this can be tax deductible, but you need to contact your CPA or your tax preparer for the deductibility of interest. So we're only making $50,000. We're at a 30% tax bracket, so 30% of $50,000 is $15,000. So basically, our net investment earnings is $35,000. But what you need to understand is we're making 6.5% on this $1 million for our investment, which is $65,000. This figure out of this figure is $100,000. Our tax equivalent rate of investment is 14.29% as compared to 10%. Our net effective rate of return, 10% over 7%, our effective increase in our net internal rate of return is 42%. That figure right there is 42% greater than that number right there. Again, very simple. 1 million, 10% interest, you get $100,000. We've got $50,000 in interest we have to pay back to our policy loan right here. Check with your CPA about tax deductibility. That leaves us with $50,000. We're paying $30,000 on the taxes for taxes right there. That's $15,000. That leaves us with $35,000. That $35,000 plus the $65,000 we got from up here. Remember, we're making 6.5% on this money here. We're arbitraging, they call it arbitrage. We're arbitraging our money. We're making $100,000. Your tax equivalent return on investments, 14.29%. Your net internal rate of return is 10%. But the effective increase in your net internal rate of return from just borrowing that money from someplace is 42.86%. So basically, what I wanted to show you right here is how you can become your own bank, how my family is becoming our own bank. We don't have to go to the bank. We don't have to worry about credit. We don't have to worry about some 30-year-old in a suit saying, okay, well, we need these papers. I used to be a loan officer. I know how this went. I used to be a mortgage loan. I used to have a mortgage company. We don't have to do this stuff anymore. We've got liquidity, use control of our money. We've become our own bank. We're using financial strategies that the banks have been using against us for years. Wouldn't you rather pay yourself than the bank? Give me a call and I'll teach you how to do these things.